If you own a home in Georgia or you're about to buy one, there's one thing that stands between you and financial disaster, and most people don't even understand how it actually works. I'm talking about homeowners insurance, and today I'm going to walk you through everything you need to know in plain English so you can stop guessing and start understanding what you're paying. My name is Frank Warren. I'm the founder of Iron Legacy Insurance, and we help Georgia homeowners build coverage that actually protects what they're building. So let's start with the basics. Do you actually need homeowners insurance? Technically, if you own your home outright and don't have a mortgage, it's not legally required. But here's the reality. Your home is probably the single largest financial asset you own. If a fire, a windstorm, or a lawsuit wipes out that home and you don't have insurance, you're rebuilding from scratch. Out of pocket, most people can't absorb that kind of loss. Now, if you have a mortgage, and most of us do, your lender does require homeowners insurance. They have a financial interest in your property, so they're going to make sure it's protected. It's non-negotiable. But here's the thing most people miss. The coverage your lender requires and the coverage you actually need are not always the same thing. Your lender cares about the structure. They don't care about the stuff in the house or your personal liability exposure. And they don't care whether you can afford to live somewhere else while your home is being repaired. That's why understanding your policy matters, even if you already have one. Every standard homeowners insurance policy, and we're talking about Georgia HO3 policy, are built on 6 core coverages. Think of them as 6 layers of protection, and I'm going to walk you through each one of them right now. Number 1, the dwelling coverage. This is the big one. This is the one that covers the physical structure of your home, the walls, the roof, the foundation, the built-in appliances. If your home burns down, this is the coverage that pays to rebuild it. And the number here should be based on what it costs to rebuild your home today, not what you paid for it. Not what Zillow thinks your home is worth. That's a critical distinction we'll get into in a later video. Number 2, other structure. This covers things on your property that aren't attached to your house. Your detached garage, a fence, a shed, a pool house. Typically, this is set at about 10% of your dwelling limit, and it can be increased if you have a need for it. Number 3, personal property. This is your stuff, your furniture, your clothes, your electronics, your tools. If a covered event damages or destroys your belongings, this is what pays to replace them. Standard policies give you a percentage of your dwelling covered, usually somewhere around 50 to 70%. But you'll actually want to make sure that you have the amount of coverage necessary to cover all of your personal belongings in your house. And be mindful too about where you keep them, because most of this coverage is for on-premises belongings. Number 4, loss of use. This one gets overlooked a lot, but it does matter. If your home is damaged so badly that you can't live in it while it's being repaired, this coverage pays for your additional living expenses. Hotel stays, meals, even temporary rental housing. You don't want to be fighting your insurance company over where your family is going to sleep. Personal liability. This covers you if somebody is injured on your property and sued, a guest trips on your fronts, a kid gets hurt on your trampoline, your dog bites it. Liability claims can get expensive. We're talking legal fees, medical bills, court judgment. Most standard policies start with $100,000 in liability. To be honest, for most homeowners, there's not really enough coverage. We recommend going with at least $300,000 in liability coverage for your premise, and we can always tack an umbrella policy onto that if it's necessary. Finally, number 6, medical pay. This is the small coverage. It covers minor medical expenses for guests who are injured at your home, regardless of who's at fault, lot, household member. It typically starts around $1,000 to $5,000 coverage. It can go up from there in certain cases. Think of this as your lawsuit avoidance. Now here's the biggest mistake I see Georgia homeowners. They buy their homeowner's policy when they close on house, and they never look at it. That policy just auto-renews year after year. Think about it. Construction costs go up, you finish basement, you buy new furniture. If your coverage hasn't kept pace with those changes, you could be significantly underinsured and not even until it's time to file. And that's why we tell our clients your homeowner's insurance should be reviewed every single year, not just reviewed. So those are the 6 building blocks of every homeowner's policy. If you understand those, you're already ahead of most homeowners. So here's what I'd encourage you next. Watch our video on what homeowners insurance, because the gaps are where the real risks. And understanding what's excluded from your policy is just as important as understanding. I'll link that video right here. And if you want us to take a look at your current coverage and show you exactly where you stand, there's no cost. I'll put the link below to a free cover view. I'm Frank Warren with Iron Insurance.